Vakaraubuka, Radio Bula Duavata, San Francisco. Vakailavo vatamai.
So if you're interested in learning, right, our campaign is open to everybody. So we would love to be able to provide you a basic education on finance.
Kaya bakay, long binakamayan sana kadua, sana tiko binakatalangana kenaisaw.
If you are thinking debt, you will attract debt.
Na raw lang ni tos na chana kemisaw, na baka na ibakatangan na yan din inomutumbo.
Prangoda na imbalan-balan ni Vaka sa manggo kinabungatala na nong da programo Vakaraubuka. En ono na kalokan na via ni Vakaraubuka bikemado ya Amerika. Doon na kalokan ni single ni Vakaraubuka bikemado may biti. Vakailavo en Vakaraubuka. Prangoda kinananon rin Vakasala na kinadaw en Vakailavo. Radio Bula Duavata, San Francisco. Vakailavo vatamai.
Ia sao sibitong gano ono en ruana miniti o ni sana reda tiko maingor ni kero sama ibeto maniti ko endongo ke Brad Hamada. Mr. Brad Hamada kerondo mai venga rabitu kani na nondi wasining o Navata en vea kabine Vakaraubuka Vakailavo en Vakaraubuka. Go endona ulutanga Vakailavo ia kerondo sanga me wakalalai toka mandanga en ve Vakaraubuka rawa ni to rongoada tiko to le vakasamataka ka to le dakadakataka na ve ka to na rongoada. Bula vinaka, Brad.
All right, good afternoon.
Yes. Next time I'm going to expect you to say Bula vinaka.
I will work on it, and next week we will deliver.
Thank you, Brad. How has your week been?
It's been an exciting week. We've been working with a lot of families this week, and I'm glad to be back to share more insight on our finances.
Great. Anything exciting in your quest to educate and share your campaign with all these families? Anything exciting this week?
Last week I did, while I was away, I did actually get to meet some interesting people, people that are of like very high net worth. And we got to talk a little bit about money. And, what I found out was that regardless of how much money you have, people are always concerned about how it's managed and making sure that it's handled properly. And so even though there are people that don't need, let's say, somebody to grow their wealth or they're independently wealthy, they're always looking for how they can pass it on. They're always looking for how they can be smart with it. And I'm glad that we're here to be able to share with your listeners some of these ideas and some of these concepts to help them move their finances to the next level too. Great.
Thank you. So I'm just going to go off in Fijian to my fellow listeners, our fellow listeners this afternoon. Brad, you know what, Brad? I think you do a better job of kind of just introducing yourself to our listeners for the newbies this afternoon.
Okay, fantastic. Yeah, my name is Brad Hamada. I live in San Francisco right now, but I grew up in Hawaii through high school, and I grew up as an engineer, but found my passion in helping people understand their money, and so I work with several organizations, including a national nonprofit, through which I have a certified financial educator designation, so I can go around the United States and teach financial literacy.
Thank you. Having said that, I would like to also invite our listeners, if there is any questions you would like to ask Brad during our program, feel free to put your questions in the chat, and I'll be able to share it with Brad. I'm sure Brad can see it as well. So any questions about finances, anything you would like to know, please feel free, because this is our program. Nonda tu programo vata kedengo senga ni vaka senga ni songa e nanumiti kina gona nonda tu programo raramba ka kire tiko ani ndo bisure tiko ani ke tiko sono pakataro nenge bola tok ngamaya. Brad, so our topic today, we decided we were going to talk about money in the bank, right? Money in the bank.
Absolutely. Yep.
So, I think I mentioned the other day I went to the bank, and then the teller was explaining to me, or the personal banker, that wasn't the the teller, the personal banker, she was explaining to us that if you put money in the bank, like your savings account, and right now it yields a 0.01% interest. And I'm like thinking to myself, okay, so they charge all these fees, all these monthly fees, and then they're giving us a 0.01% interest. And then she went on to explain about the CD. The CD is, remind me again, Brad, what is a CD?
We call it's a certificate of deposit.
Certificate of deposit, and I'm sure that most of our listeners are familiar with the term CDs. But maybe not everyone understands what CD means, right? So it's a certificate of deposit. Could you please enlighten us a little about that? What is a certificate of deposit? What kind of account it is? Is it a good thing, a bad thing?
Okay, so certificate of deposit it's pretty simple. When you have a bank account and, when you can take money in and out of your bank account, you earn very little interest because you can take it out. You can put it in today and take it out tomorrow. And so when you have a certificate of deposit, what you do is you commit to the bank that you're going to put the money away for a certain period of time. So maybe it could be 1 year or 3 years or something like that. And what the bank does is, since they know you're going to have your money, they're going to have your money for that period of time, they're able to give you a little bit higher interest. So now these days you may see CDs, going up to 2, 3, 4%, depending on where you bank and different kinds of interest rates. But that's essentially what it does. Is it creates a guaranteed interest rate.
Mm-hmm.
If you sign on and you give the bank your word that you will not touch the money for a certain period of time. And typically, the longer you're willing to put it in, the better interest rate they can give you.
And so that means it's locked, right? So you don't even have access to your money?
So it is locked in. You can access it, but typically when you access it, there will be penalties. And typically the penalties will wipe out any type of interest that you make. So when you put it in there, I mean, you need to really make sure that you're committed to keeping it in there for that period of time in order to get whatever benefit they're offering.
Thank you, Brad. So in your experience as a financial advisor, what would be a minimum when you're talking a CD, like a certified deposit or money you put into that account for long term? I think the other day the banker mentioned 7 months, but what would be the minimum as far as you know? They do have short-term CDs like 3 months and 6 months, but it just depends on your particular situation with money. Mm-hmm.
If it is money that you don't intend to use and have no use and are very sure that you're not going to need access to it, then putting it into a longer CD is fine, like a 1 year or 2 years. But you do have to realize that if you pull the money out early, then you're subjected to penalties that can eliminate that interest. And so, it's really, for people that are looking they have an emergency fund, for example, in the bank, that can be a good place to put your emergency fund to earn a little bit extra interest, especially now that rates are going up a little bit.
Mm-hmm.
So now we can actually get some noticeable returns for our money.
The other day she mentioned something about 4.75, and I thought that was pretty good. 4.75% interest, and I think the term was like minimum seven months. Would you say that was good? Or as far as you know, has there been better interest on the CDs?
It just depends on where you bank. What I tend to see is that credit unions tend to have maybe a little bit higher interest than banks do. But banks, of course, have much more money, so they're more secure, right? So there's always a balance between that. But yeah, most banks and credit unions their rates are starting to inch up. So it doesn't surprise me to see like a long-term savings type program yielding about 4% or even more.
Mm-hmm. Thank you. Is there anything else you would want our listeners to know in terms of CDs and savings, your savings account, putting money in the bank?
Yeah, so I think, with CDs can be good. But what I tell people is, even though the interest rates are going up, 3, 4, sounds like almost close to 5% in that location you were talking about, we have to make sure that you're gauging it relative to the time frame that you need. So if you need the money in 6 months, putting it into a 2-year CD because it has a very high rate of return may not help you very much. And also you want to make sure that when you put a lot of money into a CD, that money is actually growing, because we know right now, like in the past year, inflation was very high. It was up over, depends who you ask, but it was up over 7%, at some points 8%. And so receiving 4% interest, even though it's higher than we're used to, still doesn't really keep our money, have its money keep its value. So you always want to make sure that if you're going to put your money somewhere long term, that you are at least being able to maintain the value of that money, so that when you get it back, it's worth just as much or more as when you put it in.
Yeah, I was going to ask. So let's say you put in some money for your CDs, seven months, like we were told, and then at a 4.75% interest. Is that guaranteed that when I do get my money out in 7 months, that it would have grown 4.75%, regardless of what the market is or the inflation? Is that guaranteed in the CDs?
So that is a great question, and it's a great question because when they say 4.75, they typically mean an annual rate. So if you put it in for 7 months, you're going to receive a prorated amount of that. So you're going to have to put it in for a year in order to get 4.75%. 7 months will give you 7/12 of that return. So everything is spoken of in terms of annual rates. So if it's a 6-month CD and they say the annual percentage rate is 8% or whatever it is,
right,
or 6%, you're only going to receive a portion of that because it's not a full calendar year.
So you're saying that if I put it in there for a year, I will be guaranteed the 4.75.
That is correct, yes.
Regardless of if the market tanks or inflation?
Yeah. Yep. So if it's a CD, then it is like a contracted rate. So you will receive that if you put it in there for the full year.
Thank you. I would like to just ask our listeners this afternoon if there's any questions. Ke wakaindu na taron do bia taranga mai na vika Vakailavo na bange roni do bolamai gai nage kiri nage re to kan ngo Brad roni nage we buki to kan weekend to en we Vakarara matagitiko to sa kilanga to ko tenai lavo to bitani na bange. There's interest, hardly any interest, so to speak, because then you've got the fees to deal with, right? So I've heard some people say it's better we just hide our money under the mattress. So what would you say, Brad, if someone has all this money and they decide to just do their banking at home? Because when they take it to the bank, we're not talking CDs here. We're just talking taking it to the bank, savings account, and then with all those fees, it's better to keep our money at home. What would you say?
So first off, I would say if you do want to put it under your mattress, make sure that it's fireproof because your mattress is not FDIC insured. But you want to, obviously, if you keep it in your house, I mean, you literally, it's subject to a lot of things that maybe you don't have in the bank, and there are guarantees. Personally, we joke a lot about that when the interest rates are low, that it's better just to keep it bury it in a can in the backyard. But the honest truth is, these financial institutions are good because they can keep your money safe. But you're right. You want to make sure that when you're putting your money into these plans, that you're putting them into a reasonable plan for your situation. So if you go into a bank and you have, let's say, $10,000, and they say they're going to put you in a preferred checking account that earns interest, but you need to keep $10,000 balance, and you start to see that, oh, now it's $8,000, or it goes down, and then you're subjected to fees, then you may want to reconsider if that's the right program for you. Don't just put your money in one place and forget about it for the next decade, because things can change, and we want to make sure that your money stays safe.
Thank you, Brad. One other thing, when you mentioned the 10,000, now I'm reminded, and it's something that we talk about, quite a lot in our communities, because let's say you have $10,000, and the thing is, the mentality is, don't put your money in the bank. Like if $10,000, then you'd have to pay taxes on that. Can you elaborate on that, please?
Yeah, so the money that you put into the bank or into any investment is what they call your cost basis. So typically, if you just go to the bank and you give them $10,000, you're not subjected to tax on that. But if you earn interest above $600 a year of interest, then you do have to pay taxes on that money.
On the 600.
Yes.
Au nui taka ni sama tata ya, baleta ni kilani ando na katundu veitalanoa takatali nga Vakailavo me to ke tumbiu lavo ng bange to li maroro i lavo ng bange tini na $1 ng dollar e na senga ni ndo na tax ia ke baka e tumbu na nondo to i lavo baka bakarita katiko Brad ke baka tumbu mbeka kamanda na lebu ni tumbu e ono ng $1 dollar yo ya na kai ngi lava ke bekento mi tu soma kina na nondo to tax mai na tumbu ni lavo tumbi te kina. So let's say, Brad, we had, we've been putting money in the bank, and then it grew up to like $20,000, our deposits, right? We're just trying to save money. Then we may, let's say at the end of the year, we've got $20,000, and the $20,000 yielded a certain amount of interest depending on what the interest is, right? So it's that interest that we'll be paying taxes on. Not
that
the
is correct. Yeah,
$20,000.
typically, the money you put into a bank, you don't pay tax on, especially if it's just like cash or like from your paycheck. But any interest that it earns is taxable.
Au nui taka ni sa matata tiko iai. Baleta ni o ndoronga da Vakailavo, ni kuna mbiu lavo ng bange tin na $1 ng dollar e asa na rani kuna sumi tax. E nangira iyo ke baka ko sumi tax baleta wale nga na tumbu ke baka na account ko mbiu takina e tumbu e tiko na kena tumbu ia nga na kau na ngai sumi baka dava kina sena no mu tax on the interest. Senga ni no mu tini na $1 se rusa nga bulu na $1 I kombiute ani ng bange. Ya ndonga na kai rani to kilani men evina ka men na Another thing, Brad, if you could kind of go into details on FDIC. I know that majority of us, if not everyone in our community, in our Fijian community, we come here, we open a bank account. And then, of course, we see the FDIC, like FDIC insured. It's just right there. Could you please help our listeners understand what that means?
Okay. So a lot of people think FDIC means that it's insured by the government. And the truth is that actually the FDIC is an insurance company that the government brings on to insure the money. So the money is not insured by the federal government itself, but the federal government has chosen the FDIC as an institution that insures the money. So a lot of times people, worry about, well, what happens, they ask, well, what happens if the investment company goes under? But, we had situations where the FDIC has struggled to meet its obligations because banks had fallen short. And so we've seen a few banks go under recently.
Just recently.
Silicon Valley Bank, SVB. And even in that case, the FDIC came in, they took control of the assets, and they were able to work out of that situation. But the FDIC itself is not the federal government. It is an insurance company that is brought on by the federal government to insure your money in banks. And then, of course, as you know, credit unions are a little bit different, and they have a slightly different. They don't have the FDIC, but they have a different type of insurance company that insures them as well.
So that means that to a certain level or a certain limit, your money is insured. So, like in the case of the banks being closed, like those banks that we've just witnessed closed recently, in those cases, the money that's in there for all those people that banked with them, they're guaranteed that they'll still get their money, right?
Yeah. So right now, the FDIC guarantee is up to $250,000. So if you had less than $250,000, your money is insured by the FDIC. If you had more than $250,000, then the insurance does not cover above $250,000.
$250,000. Thank you, Brad. Ni taka ni sana matata toka e vida na kalalai o ke lani ngoi ndo na ulutanga rambai levu. So we can toto sanga ni ndo veitalanoa taka, baleta mbeka ngani sarui fiti ferfere ambeka. Yeah. Ke wakai tu e sana no ndo wakatataro ndo ngembi tamai rani nagai so mai ani Brad. Brad, just before we round it up for tonight, is there anything you would like to leave with our listeners tonight?
Yeah, I just want to thank all the listeners that tune in. I want to thank you guys for any feedback you guys have provided, and we look forward to having more discussions. I don't doubt that we can do a lot more for the Fijian community. So don't be shy. Reach out. We'll get you on our workshops. We'll get you learning about your money, and we will help you. We'll help you understand things for not just for yourself, but for your future generations as well. So looking forward to having more great discussions and talking more.
Thank you, Brad. And I would like to just emphasize that these workshops are free. You do not have to pay anything for workshops. And I know that financial literacy is much needed in our community. I mean, we go and pay for certifications, pay for classes and things like that. But the workshop that Brad is offering is free of charge. So just reach out. Ninge be tartar mai ke baka ni binakata me nangai be baka matata taki ani be baka rarama taki tiko ani Brad and a sonaka me baleta na nomu marroi lavo na ibena banura ni kombita kina na nomi lavo mo marroya retirement planning and all that. Ninge be tartar mai nangai rauni na sematike mo ni be Brad mondo ge veitalanoa. And Brad, I would also like to say that I'm looking forward to meeting you and your team, or maybe not you, but a member of your staff that would also be available in our very first Fijian Health Ministry Fair next Saturday.
Oh, absolutely, yes. So look out for us. If you guys know Una, stop her. She can introduce you to our team that'll be there. And just looking forward to being able to reach into the community and provide more service.
More service, and also part of the service that Brad and his team will be providing for us that day is signing you up if you need help getting signed up for Medi-Cal, right? Medicare.
Yeah, we're gonna have a team there that's gonna be working with Medicare. But just bring your financial questions to our table. Ask away. We're gonna have people there that can cover the entire gamut of financial questions that you might have.
Thank you, Brad. Nasing Vakaraubuka mango na katin kavito ni singa ni bulo chune vakaiduriti ko mai Petaluma 320 North McDowell Boulevard 11 a.m. to 2 p.m. Onitaka ni tunang elisote ani kina. Brad Hamada and nonda to Vakaraubuka Vakailavo and Vakaraubuka sa may davatalitungan go na niro veitalanoa. Thank you, Brad. Have a great weekend. Stay safe.
All right, thank you. You too.
Thank you.